So a big week on the data docket. All eyes will be on the Federal Reserve meeting this week, with the market already banking on a 75 basis point hike. Is there room for surprise though? Let's find out. The view from Pete McGuire from XM. Pete, good to catch up with you. So yeah, that's the big one this week. There's also a lot else to look at on the macro front, but just as far as the Fed is concerned, then it looks as though they're going to go with 75 basis points. However, is there perhaps the potential for a surprise given what we're seeing in inflation and also the effect those rates that have already been we've already had those rates rise, and how that's affecting the consumer at the moment?
Well, good morning, Andrew. Yes, I think there is a chance of a surprise. You're probably looking at about a 15% chance for an even bigger hit out of the ballpark at 100 basis points. And that's what traders, I think, are digesting. We've seen, a fairly strong week last week, good movement across equity markets. And of course, currencies, the US dollar's backed off a little bit. And I truly think that I wouldn't be surprised at all. I'd be going with the 15% personally. So, yeah, let's look for a surprise.
All right, so you're thinking they'll lift a full percentage point then?
I won't be yes, exactly right, Andrew. And I was going to say I won't be surprised. I won't be surprised because the reason why I won't be surprised is quite simply they've got to rein it in. And the inflation globally, we understand. I've got those. The thing, I think Thursday's release of preliminary GDP numbers are going to be a bit of a wake up. And that for that Q2. So I wouldn't be surprised to see again, with the PMI sitting there, US services at 47, that we'll be looking at recession, that 2 successive quarters of negative GDP growth.
Yeah, so, I mean, you don't feel as though perhaps what we're seeing with economic growth at the moment, which is trailing off, you also mentioned we are getting producer price index figures this week out of the States at the same time. Sorry, not that's locally. In fact, we get the GDP number, of course, on Thursday. So, what do you see happening as far as global demand is concerned, and also those inflationary pressures? Do you feel as though they're easing, perhaps because the supply chains, they look as though they're easing?
Yes, they certainly do. I've got to agree with that. But still, the storyline is that inflation is creeping up. And that was demonstrated across Eurozone and UK, and now with the states getting some data releases in the next matter of days, I'm pretty sure that it'll be higher than 9.1, and I wouldn't be surprised to even be in double figures by late August, say September. So they've got their hands full, the Fed, and it's just a very, very difficult target to assess. Inflation one side, but naturally, negative growth the other, and that spells out one word traditionally, and that would be a stagflationary environment.
So, Pete, are you finding it too difficult to forecast beyond this next meeting then, are you?
It's very difficult, Andrew. I mean, we've had a massive run up as far as US dollar, and for the instruments that we look at, US dollar has just been, a one-way train, and now it's back at 106 off those 108, sort of 108 and a half number. We've seen the euro after that 50 basis point hit up, it's now at 102. Yen, there's no talk as far as raising rates, and they're still sitting at 136. So there could be a little bit of time to give back some of that hot air coming out of the US dollar. But if they hit it out of the ballpark with 100 basis points, and that does puts another dash of wind across the US dollar index, so it'll push it higher.
Pete, we also get a good reading on inflation locally too, with the CPI number out on Wednesday. It's expected, the forecast there, that's going to hit 6.2.
Yeah, exactly. So, we're behind the curve as far as the big boys, the UK, Europe, and the US, and across much of Asia. So, we're certainly catching, and is 6.2 going to be our top number, Andrew? Are we going to be at 7 by, September, October? With energy prices still, $100 a barrel, it could very well be the case. So that seems to be the dilemma again, what we're going to do as far as central bank meetings, RBA, early August. It could be a big push up there, another 50 basis points here or 75.
All right, so you feel as though they could go 75 in the next meeting?
I wouldn't be surprised. Again, I mean, nothing really, and I know that's not a word I should be using, but nothing really shocks me anymore. It just, when you look at what's happening globally and geopolitically, you're talking about what's happening with currencies, commodities, stock indexes. Yes, there's always some excitement every single day.
How are you seeing the Aussie dollar at the moment? Is he sort of looking fairly resilient given what's going on in the background?
Yes, exactly. I mean, it's 69.30, 69.40 sort of handle, but that US dollar's come off, and that's where you've seen that move to the upside as far as Aussie, Kiwi, and even like the euro. Pound strengthened a little bit back at 1.2. So yeah, the Aussie sitting. It's been a nice trade. US dollar off, Aussie up, and everyone's done very well over the last week. It's been strong for equities, certainly for commodity moves, and FX has been, absolutely on fire.